Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Kopin.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And a quick note before we get into today's stock. If you trade stocks, crypto, forex, gold, or indices and want clearer buy and sell signals, you can check out VIP indicators through my link below. Grow $100 to $10 with VIP indicators. VIP indicators offers TradingView indicators, market alerts, trading education, and chart reading support with up to a 93% win rate. The tools are designed to help traders spot possible setups faster and trade with more confidence. But please remember, trading is risky. No indicator can guarantee profits, and growing $100 into $10K is not guaranteed. Use these tools for education and analysis only, manage your risk carefully, do your own research, and never trade money you cannot afford to lose. This is an affiliate link, so I may earn a commission if you use it, at no extra cost to you.
So imagine the most advanced supercomputer on Earth.
Okay, I'm picturing it.
We're talking about, AI infrastructure capable of writing complex software, modeling climate change, or sequencing DNA in just a matter of seconds.
Right, just massive godlike computing power.
Exactly. Now imagine all of that incredible power being choked.
Yeah.
Just entirely bottlenecked by the exact same physical technology we use to wire a 1950s toaster.
Oh, wow. When you put it like that, it sounds completely absurd.
It really does. So today, we're pulling from the latest earnings calls, some fresh chart data, and recent analyst notes to look at a company trying to fix that exact problem.
Yeah, and recently Kopin experienced a sudden, just massive up-limit down trading halt. It was totally driven by intense investor demand.
And for anyone tracking the market, a halt like that is a massive flashing light.
Yeah.
I mean, it usually means the market just woke up to something big.
Oh, absolutely.
So today's mission is to figure out if this under-the-radar domestic display manufacturer has actually found the solution to the biggest, most expensive bottlenecks in AI data centers. Or, if we are just looking at it the flash-in-the-pan hype cycle.
It's a genuinely fascinating scenario to unpack. I mean, you have a company that has built its entire reputation on rugged defense technology.
Right.
And suddenly they're stepping into the ultra-fast, high-stakes arena of artificial intelligence infrastructure. The excitement we are seeing on the tape is palpable.
For sure. But it's based on a very specific premise, right?
Exactly.
Mm-hmm.
They are attempting to fundamentally change the physics of how data moves between the servers that power modern AI.
But as always, our job is to separate the explosive market narrative from the actual underlying business reality.
Right.
We need to tear apart their balance sheet, look at the actual revenue mix, and figure out if this technology is really going to translate into compounding growth for your portfolio.
All right, let's move into the wealth building context.
Yeah, because when you look at any portfolio, you always have to ask how a specific stock fits into your multi-year investment mindset.
Right, because let's be super clear here. What we are looking at today is not a short-term momentum trade that you just fly in an afternoon.
Mm-hmm.
You need to understand the structural advantages of the business first.
Exactly. So how would you categorize Kopin's position right now?
Well, Kopin is what I would classify as a dual threat infrastructure play. It is capitalizing on two completely unavoidable macro trends at the exact same time.
Okay, let's break those down.
First, there is a massive global push for sovereign domestic defense supply chains, what the defense industry is currently calling drone dominance.
Drone dominance.
Yeah. And second, you have this desperate multi-billion-dollar need for faster optical interconnects in AI data centers.
Let's focus on that defense moat first because, well, it is arguably their strongest foundational asset.
Oh, without a doubt.
They are the only company in the United States manufacturing 4 entirely different types of microdisplays. We're talking AMLCD, FLCOS, MicroLED, and OLED.
Which I know sounds like a total bowl of alphabet soup.
Yeah, it really does. But the distinction is critical for your wealth-building thesis. AMLCD is your basic, rugged, liquid crystal display.
Right.
Then FLCOS offers insanely fast refresh rates, which you absolutely need for augmented reality so the user doesn't get motion sickness.
Makes sense.
MicroLED is blindingly bright, which is required for daytime military operations. And OLED provides absolute perfect black contrast, which is just non-negotiable for night vision gear. And Kopin does all 4.
And the fact that they manufacture all 4 of those inside the United States is the absolute linchpin of their moat.
Why is domestic manufacturing so crucial here?
Because of strict domestic manufacturing laws, U.S. government and Department of War applications legally require domestic manufacturing for these critical components.
Ah, so it creates a highly protected, almost impenetrable revenue stream.
Exactly. Foreign competitors simply cannot bid on these contracts. Even if a foreign company made a cheaper screen, the switching costs and legal hurdles for the government to find another compliant supplier would be astronomical.
Okay, that makes sense for the defense side. But as an investor looking at the long-term compounding potential, how are you supposed to categorize this?
What do you mean?
Well, do you treat this as a defense stock, which usually means steady, highly regulated, somewhat boring government contracts? Or is this an AI stock, which carries massive volatility, but also the explosive growth expectations of the tech sector? Like, is this a reliable utility company that just suddenly found oil on its property?
That is the defining tension of the stock right now. I mean, the legacy defense business is the floor. It is the steady foundation that keeps the lights on.
Right.
But the AI component is the massive, high-risk, high-reward growth engine.
Now let's look at the fundamentals.
Yeah, so if we break down the Q1 2026 earnings, we see a business in the middle and a radical transition.
The numbers were a bit confusing at first glance, honestly.
Right. The top line revenue was basically flat year over year. They brought in $10.6 million compared to $10.5 million the previous year. If you just stop reading there, you would think nothing had changed at all.
But the underlying mix of how they generated that money shifted dramatically. You really have to look under the hood.
Exactly.
Product revenues actually dropped significantly, falling from $9.2 million down to $5.4 million. They cited lower shipments for their traditional thermal weapon sights and LCD screens as the primary reason for that.
But simultaneously, their non-product revenues surged from $1.3 million up to $5.1 million.
Wow, that's a massive jump.
It is, and that was driven by government MicroLED awards and strategic collaborations for augmented reality and thermal tech.
So from a growth thesis perspective, what did that actually tell us?
It tells us there is a heavy pivot toward funded research and next-generation development. Essentially, the government and their partners are paying them to innovate.
I hear that, but we have to address the massive elephant in the room regarding their fundamentals. I'm looking at their profit margins, and frankly, it is alarming.
Yeah, it's a tough pill to swallow.
The cost of product revenues hit 103% of net product revenues. That is up from 83% previously. Let me break that down for you. It means if they sell a microdisplay for $100, it costs them $103 just to manufacture it.
Which is obviously not ideal.
Selling products at a negative margin isn't a sustainable business, it's a charity. That is a massive red flag for execution.
It is undoubtedly a painful metric, and it looks terrible in the short term. The margin compression is largely due to reduced production efficiency on a lower overall revenue base.
Right, because when you run a factory at half capacity, your cost per unit skyrockets.
Exactly. But we have to look at management's strategic fix for this. To regain cost control, management is bringing full-scale OLED microdisplay manufacturing in-house at their Westboro, Massachusetts facility.
Oh, I see.
Yeah, they are internalizing the supply chain to increase speed to market and drive margin expansion once the facility is fully online.
But building out domestic manufacturing is incredibly expensive. Looking at their balance sheet, they have $34.1 million in cash and total liquidity of $59.5 million. But if you read the fine print, the story changes entirely.
Yeah, the restricted cash issue.
Right. Out of that liquidity, $25.3 million is restricted cash. It is heavily bonded against an ongoing litigation appeal involving a company called Blue Radios.
Yes, that is a legacy intellectual property dispute over wireless technology. Kopin is appealing the ruling, but the court requires them to post a surety bond.
So that $25 million is essentially sitting in a vault, completely untouchable, until the legal system grinds to a halt.
Exactly. So their actual flexible cash is significantly tighter than the headline number suggests. And they still need to spend roughly $5 million a year in capital expenditures for 2026 and 2027 to finish building out this Westboro facility.
That brings us to the catalyst timeline.
Right. Because as an investor, the balance sheet tells you where a company has been. The catalysts tell you where it is going over the next 3 to 12 months.
And what events could trigger a significant repricing of the stock?
The absolute biggest catalyst on the board, and the reason the market is paying so much attention, is the AI partnership. Kopin has entered a strategic collaboration with a company called Fabric.ai.
Okay, so what are they actually doing together?
They are using their proprietary MicroLED platform and a bidirectional architecture they call NeuralDisplay to create ultra-high-speed optical transceivers. They are branding this tech as NeuralIO.
Let's translate that into plain English for a second. The goal here is replacing the copper wiring inside AI data centers.
Exactly.
Right now, data centers use physical copper cables to connect thousands of highly advanced servers. But pushing massive amounts of data through copper means pushing electrons.
And electrons have mass.
Right, they have mass and they create friction. Friction generates incredible amounts of heat, and heat eventually melts the wire or corrupts the data.
Yeah.
So you have a hard physical limit on how fast data can travel.
That is the exact bottleneck. The AI processors are ready to work faster, but the copper cables simply cannot carry the data quickly enough without overheating.
So what's Kopin's solution?
Kopin's goal is to replace that copper with optical light via these NeuralIO chipsets. Instead of pushing electrons, you are shooting photons light.
Which changes the game entirely.
Totally. Photons have virtually zero mass, generate almost no heat, and can carry exponentially more data. And this isn't just a theoretical science project in a lab, it is backed by a $15 million initial order from Fabric.ai.
Wait, really? Fabric actually put money down.
Oh yeah, and Fabric actually took a 19.9% equity stake in Kopin to seal the deal.
Okay, I understand the physics, but let me play devil's advocate here. $15 million is literal rounding error for companies building AI data centers. Tech giants are spending billions per facility.
That's a fair point.
Is a $15 million order real proof of a pivot, or is this just a paid science experiment? I mean, can this actually scale? It feels like trying to force a fire hose of water through a cocktail straw. Eventually, the friction just melts the straw, which is what's happening to copper.
Right.
But replacing all the plumbing globally with optical tech is going to be incredibly expensive. It's like going from dial-up internet to fiber optics, but for entire massive data centers.
It will be expensive, but it is ultimately a mandatory evolution if AI models are going to continue scaling. $15 million is small for the broader industry, but for Kopin, it's the funding needed to produce a demonstrable prototype.
Okay, fair enough.
That is the AI side of the timeline. But we also have significant defense catalysts. They recently landed a massive $21.5 million follow-on thermal imaging contract.
Wow, okay.
Plus, they are officially entering the first-person view, or FPV, drone market with their Sentinel FPV tech. We've all seen how FPV drones have completely changed modern warfare over the last few years, and Kopin is supplying the domestic optics for that exact shift.
Looking at the calendar, their next earnings call is in early August 2026. But the critical milestone for you to watch is the end of 2026.
Exactly. Management has explicitly stated they expect to have a demonstrable working NeuralIO chipset ready by then. That is the make-or-break moment for the AI thesis.
Now let's pivot to the chart.
Yes. The technicals tell us how market mechanics are reacting to this fundamental shift. The stock experienced a definitive aggressive breakout immediately after the Q1 earnings call, specifically tied to the Fabric.ai announcement.
Right, and we mentioned this at the top. The stop triggered an LULD pause, which stands for limit up, limit down.
Yeah, for anyone unfamiliar, an LULD pause is a market-wide circuit breaker. It happens when there is a massive instantaneous order flow imbalance.
In this case, explosive buying pressure to the upside, right?
Exactly. The algorithmic trading bots and retail buyers flooded the order book so aggressively that it broke right through the psychological resistance levels on the chart.
That's wild.
When a stock moves that fast, the exchange literally halts trading for 5 minutes. It forces the algorithms to recalibrate and gives the market a moment to breathe before resuming.
It's an incredibly exciting signal, but as a risk-aware investor, I really have to point out the dark side of that kind of chart action.
Oh, absolutely.
This kind of volatile AI-driven re-rating is heavily designed to shake out weak hands. When a stock violently gaps up and halts, you immediately see wild, unpredictable swings as early buyers take their profit and new buyers scramble to find an entry point.
It's pure chaos for a bit.
Yeah. The chart is trying to establish a new higher low base.
Yeah.
The trading volume was far above normal, which is a great sign because it shows true institutional conviction.
Right.
But surviving that kind of high volatility requires a very strong stomach. You cannot let your emotions dictate your trades when the chart is whipping around 10% in a matter of minutes.
So what does market sentiment look like?
Well, the overall market is definitively bullish right now. And what I find analytically fascinating is that the market actively chose to price in the AI infrastructure narrative, rather than, selling the news on a weak quarter.
Which is what usually happens.
Exactly. Technically, they missed their Q1 earnings per share estimate by a penny, coming in at -2 cents instead of -1 cent. Normally, a company with 103% cost of goods sold missing earnings gets totally punished.
But buyers just didn't care.
They didn't. The forward-looking optical narrative completely overpowered the backward-looking balance sheet data.
And we are seeing Wall Street analysts validate that exact bullish mood. Canaccord Genuity initiated coverage with a buy rating and set a $5.50 price target. Lake Street Capital reaffirmed their buy rating with a $5 target, and Zacks Research actually raised their assessment from a hold to a strong buy.
I also always look at the institutional flow. If you look at their 13F filings, the quarterly reports where massive hedge funds and institutions are legally required to show the SEC exactly what they are buying and selling, you see a clear shift.
Yeah, institutional money is moving in.
But even beyond the 13Fs, the fact that Fabric.ai took a 19.9% equity stake is the ultimate sentiment indicator. That is essentially a massive insider vote of confidence.
It really is. They are aligning their own financial incentives directly with Kopin's commercial success. You simply do not buy a fifth of a company unless you deeply, fundamentally believe the underlying technology is going to work.
Now, we also need to address the rumor mill, because social media is driving a lot of the retail sentiment right now.
Oh boy. Yeah, there was a highly speculative post circulating from financial influencer James Altucher. He claimed that the Kopin CEO stated the new AI business will eventually be bigger than their entire legacy defense business.
You always have to be extremely careful with social media speculation. We only deal in the facts here. But if we look at the logic behind that rumor, it actually makes mathematical sense.
How so?
Well, if this neural I/O technology actually scales, and if it successfully replaces copper across the massive multi-billion-dollar global AI hardware addressable market, yes, that revenue would absolutely dwarf their legacy defense contracts.
Right. It is a monumental if, but the math behind the rumor is entirely sound.
Now let's talk about the risks.
Yeah, this is where we have to strip away all the hype and take a grounded, highly skeptical look at what could go wrong, because a lot can go wrong.
First and foremost is execution risk.
Well,
As we discussed, the company is fundamentally unprofitable right now.
right.
They are banking on their new in-house OLED manufacturing in Massachusetts to fix their margins. If that facility faces regulatory delays, supply chain shortages, or cost overruns, that 103% cost of goods sold figure is going to stick around and severely impair their long-term survivability.
Execution is absolutely the primary vulnerability here.
Then there is valuation risk.
Yeah.
The stock is currently carrying a premium valuation that is built almost entirely on the promise of AI and the hype of drone defense.
Right. The market is pricing in a flawless execution of this pivot.
Exactly. If the AI interconnect market takes 3 or 4 years to materialize instead of 1 or 2, this stock will aggressively derate as impatient investors abandon ship.
And finally, we cannot forget their financial flexibility. Having $25.3 million restricted and tied up in that Blue Radio's legal appeal is dead capital. It is just sitting in a vault when they desperately need it to build out their manufacturing lines.
Those are very real structural risks, but we also have to look at how the company is mitigating them.
Right.
Kopin is not teetering on the edge of a financial cliff. Management has stated they have a liquidity runway extending all the way to the second quarter of 2027.
That gives them a very substantial multi-year buffer to execute this turnaround without needing to desperately dilute shareholders to raise capital.
Plus, that $15 million Fabric.ai order is already contracted. That isn't a projection or a hope. It is contracted revenue offering incredibly clear near-term visibility.
So with everything on the table, what's the final verdict?
Well, looking at the entire picture, Kopin is sitting at a profound strategic inflection point. They are actively utilizing their exclusive U.S. manufacturing moat to capture sovereign defense demand, which provides a highly defensible baseline business.
But on top of that floor, they now hold a high asymmetry call option on AI data center infrastructure through this Neural I/O optical tech. Based on the research, the bullish score for this setup is a solid 7 out of 10.
And from a long-term wealth-building view, this requires immense patience. This is a multi-year hold, easily in the 12 to 24-month range.
Yeah. If you are taking a position here, you have to be patient enough to allow the late 2026 Neural I/O chipset completion and the Massachusetts OLED manufacturing ramps to actually translate into real, tangible margin expansion.
You simply can't expect the thesis to play out tomorrow. It's going to take several quarters of execution.
Exactly.
And I want to leave you with one final, broader thought to mull over. If Kopin and Fabric AI are right, if optical light is truly the only way to replace copper wiring and solve the AI data center bottleneck, what happens to the global copper market?
Oh, wow. That's a huge point.
Right now, massive commodities forecasts are built on the assumption that AI data centers will consume millions of tons of copper. If this optical technology scales globally, it doesn't just change Kopin's valuation. It could trigger a massive demand shock across the entire global commodity sector.
That is exactly the kind of second-order effect you need to watch.
And if you want extra help reading trading charts, you can check out VIP indicators through the link below. The campaign is Grow $100 to $10 Case with VIP indicators, and their tools include TradingView indicators, market alerts, and trading education with up to a 93% win rate. But trading always carries risk, and no profits are guaranteed. Use the tools for education and analysis, manage your risks carefully, and always do your own research before making any trade. This is an affiliate link, and I may earn a commission at no extra cost to you.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.